Okay, hello everyone, and welcome to this price ladder analysis video. We're going to be going through a specific setup, a front running, front running trade setup, and we're going to be taking a look at the EuroStoxx 50 futures. Specifically, we're going to be looking for large orders on the order book. And with that, we're going to try and ascertain a move from that order in the order book, try and see whether we can actually take a few ticks out of it by front running the size and trading off of the order book. So we'll just get straight into it, a little shorter than usual this video, but hopefully we can all learn something in this. So if we take a quick look over at our EuroStoxx 50 ladder, we can see we're trading 35.77s here, a low at 35.73s. And currently on the book, the size is about, I think the average size is probably about 900 to about 1K lots. To the downside, we're seeing a little bit more thicker size, so about 1.2K is probably our average size. It's good to understand the market structure of the market you're trading in, so you know what the average bid and offer is. You can see what the clip size is. So maybe the average clip size, let's say between 100 to 300K. So let's just say about 150K. So now we just saw at 35.65, we've seen a very big bid sitting at 35.65. So we're going to actually bid right in front of that that bid, because the more it's visible by the market, the more people are going to start jumping in front of it at 35.66. And as you see, the closer we get to that market order, you're going to see actually the size of the orders in front of it are going to begin to grow, and particularly at 35.66 and 35.67. Now notice we were at about 1.4 before, about 1.4K. Watch, the more this bid becomes visible, the more people are going to start joining this. Now, we've gone from 1.4 to about 1.6K. This is now moving closer and closer to 1.7. And any minute now, as we trade closer and closer to this area, we very, very quickly expect this to grow. That's now gone to 1.7K. So we're just offered 73s here, bid 72s. The plan is when we get to this size, we're hoping, never great to hope in the market, but we're hoping that when it gets there, if we trade into it, we want to trade size into it. We don't want the bid to move. It's good that the bid is currently sitting there, and it's not moving around from price to price. It's not flashing. It's staying there. It's solid. It looks like it wants to get filled. It looks like he's good for it, and that's what we want to see. The plan is when we get there, and potentially if we do get filled at 66s, we're going to try and take the majority of our size off at for one tick, and then scale out at 2 and 3 ticks, and then hold a little bit to see if we can get a bit of a bounce here. So we just traded 68s here, 100 lots are traded into 68s. We're seeing some size come into the market. It's a decent move down into this bid. This is now moved up to about 5,000 lots. We've got 5,000 lots in the bid here. And you can see the size from 1.2K. This has already gone up to about 2K. So the size on the bids front running, we would say 35.65 is a lot more. So let's just see how we interact here. With currently trading, we've just gotten filled on 15 lots out of the 50. We've just gotten filled on the full 50. So we're offering 20 lots for the first 10 lots, and we'll keep 10 lots on just to see if we can get a bit of a bounce off of this. We've just gotten filled on the 20 lots. Again, another 10 lot at the 68s, and we're looking for the 3 ticks at 69. So that's basically, we're trying to get filled on 80% of our size for about 2 to 3 ticks. We're not trying to take too much out of the market here, guys. I mean, this is purely a front run trade. It's not necessarily a level. If we're looking without the charts, just looking at the order book, and I can see the size on the order book, I want to stay with that floor in the market. There's a significantly big floor just been put in. Now, what we're looking for is potentially for a little bit of a bounce here. If we don't get the bounce and we start moving back towards these 35.65s, the minute or the second we feel as if the offer is equivalent to the bid, that's where we're going to try and get out of this trade, because that's no longer a big enough bid to hold the market. In fact, I know that together with myself, there's many other traders that are front run this, and once they feel as if this bid is not big enough to hold a floor in the market, they'll quickly scramble. So let's see here. The offers at 300, 500. Okay, we've still got 4,300. We just went bid, but we're starting to offer and reload at 66. We've got 300 on the offer, 380, 700, 1,000, 2,000. That's almost even. Now we're even. We're going to try and get out of this. That's it. We're taking a 2-tick loss on that 10 lot. We didn't manage to get filled at a scratch. I should have been quicker, but I was probably just explaining my way through this. Naturally, if you see the offer getting to a size just as big as 64s now, you want to get out as quickly as possible. I didn't get filled at 65s. I'm smacking 64s because, as you can see, whoever's bought aggressively in front of 65s is now paying down aggressively. So we're just seeing whoever hasn't been able to take their profit is still in the position and they're paying down aggressively. From 65s, we've gone to 61s fairly quickly, and you can just see the size on the order book now at these prices. It looks like there's probably a few trapped locals or day traders that have gone into this position. So just be wary of these front runs, even though they work. A lot of the times you'll get a tick, you get 2 ticks. Be wary. If we get back through it, sometimes it's even a good flip reverse, but we'll leave that for another day. So the parameters on this trade, if we just had to go through, what we're looking for, like we said, we're looking for larger than average bid or offer. I know this seems fairly obvious, and for some of the more experienced guys listening in, it's probably not for you. It's probably for someone that hasn't really seen this before, doesn't actually understand the ease of front running an order. But let's just try and define this. We're larger than an average bid and offer, and we want for it not to move slash flash. And ideally, from a trading perspective, from what we would say a trade strategy perspective, it depends really on your market structure. If I know that off of a level I can take 2 to 3 ticks in the EuroStoxx, well, that's what I'm going to be looking for, 2 to 3 ticks off of like a small price level. I would say the majority of times in the thick markets, I'm looking for 1 tick for the majority of size. And why? Because, if you don't get filled at the second and third tick and it goes offered, you're scrambling out for the exit again, just like everyone else. So I would say, take that 1 tick. If the market offers you that 1 tick, take it, because, it is essentially a free tick if there is a very big bid or offer in the market. If I told you, there was a 90% probability that you could take a tick and a 40% or 30% probability you could take 2 ticks, you're probably going to go for the 1 tick. You go for the 1 tick every time, and you just incrementally increase your size, until you can't increase your size anymore. So, just because 1 tick doesn't sound glamorous, just because 1 tick doesn't sound, like the Hollywood trade that some people like to take on, those 50, 60 tick winners, it doesn't really matter. You build a career 1 tick at a time. So if the market's offering you that 1 tick, you need to take that 1 tick, no matter what the scenario. And the risk, obviously, you're looking for the reward. It's always great to understand your reward, but the most important thing is understanding your risk. Your risk should be no more than 1 tick through. So 1 tick through the large order. No more than that. In fact, it should technically be if that large order becomes small enough, you should be clicking out for that one tick loser. So this is effectively one tick through the large order. You'd say two tick loss because you're front running it by one tick. But effectively, you should, if you're quick enough and you understand how your market acts, in that situation, if you're quick enough, you could have taken out, one tick, or when the large order dissipates, or as you could see, when the offer is somewhat equal to that large bid. In that scenario, obviously, in the contrary scenario, if there was a large offer when the bid gets pretty much the same size as the offer, you want to be getting out, because the next move is probably going to be a squeeze of anyone that's front run that. Right, it's fairly simple little setup. I hope you guys like that. And we'll go through some other setups in the videos to come. Thank you very much for listening. Bye bye.